that is what central banks are doing. Jackson Hole is the big economics symposium next week. We'll hear from Janet Yellen. We're told that Mario Draghi is not going to make any big policy pronouncements. But do you think that indeed we are going to see central banks come back to the fore, at least temporarily?
I don't know if they're going to announce that they're going to, have grand new rate hikes at, at this conference. I mean, I think that, the topic is, a more dynamic global economy. But central banks would be really important. I mean, we're seeing leading indicators around the world. So some of the strongest growth rates since roughly 2010, when we were just bouncing back from a depressed level. But we're going to see a headwind. If you take a look at monetary policy, particularly what the Fed is essentially pre-announced, which is essentially forcing private savers to finance government as they shrink their balance sheet. $300 billion in the first year, $600 billion in the second year. And that means private savers will have to take that flow from somewhere else. That will be a headwind. But you got to remember that this is a growing economy. Globally, we're going to have a $100 trillion global economy that could grow $5 trillion next year. And so not everything is constant, but monetary policy is very, very gradually getting tighter and tighter.
So I'm going to put you on the spot here and ask you how to make money off of all this. You have the central bank headwind, maybe not a massive headwind, but a growing headwind. We have political volatility, so almost certainly going to rise in September with the potential government shutdown, debt ceiling, and all this other stuff.
Every year, yeah.
Every year. But right. What do you do now?
Okay, well, look, so international shares, non-U.S. dollar equities, are at the second largest valuation discount in history. The only time it was at a deeper valuation discount, the U.S. economy in the late 1990s, it had grown 4% for 5 years, NASDAQ bubble and Asian financial crisis at the same time. So I don't anticipate that kind of extreme again, and this kind of valuation discount is creating an opportunity. Having the U.S. dollar, go up for 6 years and finally show signs of a meaningful peak is a drag on international returns that's no longer there. So you can see it in performance this year. I think it'll have, bouts of corrections, but it's going to last. We're going to see a long period of catching up for international markets.